it was fairly lackluster session, so to say. Some individual stocks did well, the likes of a JP Associates, which has been moving up on the news flow of an imminent deal. But of course, a couple of forest clearances also, in fact, a forest clearance also came in their way. So that was one principal mover in trade on the Nifty, which went up just about 0.33%. But it was the broader markets essentially which held the roost in today's session. Not so much for the retail stocks, which ended flat with all that was happening around, or the aviation stocks also, which were fairly flat in trade. And all of these stocks will come up on your screen. These didn't do too much in trade, but there was individual traction seen in some specific names as well. If you look at the BSE mid cap and the BSE small cap space, they ended flattish in trade, but the market breadth extremely positive. The big question really remains is, what do we do if indeed the logjam on FDI continues for a day longer? Though in all probability it will be passed with certain nuances to it. But what do we do in the run-up to end of December? And that is the question that we'll ask our experts, Mr. Maheshwari, Pankaj Pandey and Ashwini Gujral. Gentlemen, thanks so much for joining in, all of you. Pankaj, come to you. It's been a bit of non-event this week, except for all that's happening in the Parliament. But stunning week, last 4 days, and a bit of consolidation right now. What are you advising clients?
You're right, Neeraj. I think last week was pretty good for the market with 4.5% kind of gains. Now, what we expect going forward is that the broader markets are likely to consolidate at current levels. We're trading about 13.5 times at 514, Sensex EPS of 1435. I think Sensex EPS growth probably will not be more than that going forward, but which is why we would not expect broader markets to really do well on the upside front. But what can happen is that the mid caps and the small cap space would witness good action, and which is where we are advising our clients to buy. We are looking at certain good stocks in the mid cap and the small cap space.
Okay. So that's the broad view on the market. Lots of specific names moved around in the session, none more so than retail, but in the stocks after 2 days of heavy trading showed a bit of consolidation, and that was the big move really for the retail space per se. But Ashwini, that's largely been the mood the last 2 days, wherein the large caps have stayed soft. I mean, there have been individual movers, but the index per se has stayed soft, but the broader market stocks have really shown traction. The last 2 days, the market breadth has been positive.
Well, each time, large caps move, they tend to move in, 2 or 3 big jumps. And then, the mid cap catching up continues. But the overall tone of the market is fairly strong, because we went down a bit, I think, towards 58.50, and from there, in the last 1 hour, we kind of bounced back. So, as long as market breadth continues to be positive, the entire, big trend now is on the upside. When you trade at 52-week highs, there's a lot of catch-up that needs to happen on the mid caps, because large caps don't really fall all that much. And since we are coming out of what you could call a bear market, a long bear market, which is, probably 2 years old, I think there's lots of catch-up still to happen, but large caps will also pick up maybe in the next couple of weeks as globally also rallies restart.
Okay, some specific stocks in news, and let's talk about the top stocks in news. Retail, of course, dominates trade. And Nishchal, what's the view on retail? I mean, let's assume that something does happen in the Lok Parliament and maybe the decision does go through. What's the view on retail?
Definitely, then retail is a buy. We already have a buy on retail for a long time actually, and I think especially if you really look at it, consumption still drives India's growth story. So if that is going to be driving the story, basically I think retail has got a very important place to and part to play. So I think all those retailers which have been able to manage scale up in their businesses should be looked at. I think Pantaloon, Shoppers Stop, Trent, I think all of them looks pretty interesting. Again, on the, if you look at the retailers on the jewelry front also, I think we like Titan quite a lot out there. So I think all these retailers will do pretty well. Again, if you really look at on the banking side of the story also, again, retailers are the guys who are big in retail are doing pretty well. So retail story is a very, very strong story in the country.
Ashwini, what's the view on these stocks? I mean, assuming that nothing untoward happens in the parliament and the decision does go through, purely from the stock market's perspective, nothing untoward happens. You think that a bit of a rally that these stocks showed with the Pantaloon going all the way to 230, you think they can notch up a bit more?
Well, it's interesting that, when this decision was announced, Pantaloon actually kind of fell back from 205, 200, but this time it's crossed those levels. Probably at that time people didn't believe that it could go through Parliament, which they do now. I think Pantaloon is getting to the next available range, which is around 220 to about 270, 75. Similarly, Shoppers Stop, etc. All of these stocks are now making their 52-week highs instead of when the decision was announced. And definitely, this will impact those stocks. Shoppers Stop could get up to levels of closer to 500. But Pantaloon remains the top pick in this space.
Okay, the big one I think in today's session on the index was JP Associates, probably the last couple of days as well. And that's really made a move. If not for the kind of rumors doing the rounds about the stake sale in the cement business or particular cement plants being sold off, then for the clearance that it got today as well. So a couple of news bits. The last 1 month 14%, the last 1 week has done well as well, and 4.5% in today's session. Pankaj, not that cement is weak, but JP is charting a course of its own. Couple of news bits doing the rounds as well. It's crossing key levels too. What are you advising clients on this, and what are you hearing with regards to the imminent news flow?
I think, like you said, it's a news-driven counter. We have a hold rating on the stock with a target price of 98. I think in case if a certain deal happens, we would see it positive if the deal happens at above $120 a ton. That is where we have valued that as of now. So if it happens higher than that, I think we would be definitely looking from a positive aspect. Otherwise, I think this news has been there for quite some time, so I don't think one should be really buying it only from that perspective. But construction business did well last quarter, but cement was a bit subdued. So I think the fundamentals will still take some time to improve, but on the valuation side, in case if there's some deal happens, I think there could be possible upside. But I think from a short-term perspective, difficult to play on, and which is why we have a hold rating on the stock.
Ashwini, I remember you said in the morning today that some of the cement stocks did not show any kind of a weakness while people believed they would, and they bounced back quite strongly, the likes of Ultratech or an ACC. JP in particular has moved around quite a bit, and it's not just a pure play cement stocks. There are other businesses attached to it as well. It's crossed some key levels, 100 being a level that it's crossed after a long while. How does it look on the charts?
Well, it's probably gone up because it's selling its cement division more than, because of the cement division. I think 90 was a key zone for JP Associates. It went up, came back, retested 90, and now is heading up. I think even JP has now bottomed out, and easily 130 could be the next zone where previously it used to consolidate 125, 130. That could be the price target from here on JP.
The other one is Aurobindo Pharma. In fact, the entire mid-cap pharma pack had a very good run. I mean, Strides Arcolab is probably a case in point, but this one is not further behind as well. Aurobindo Pharma has had a stellar run from, it was languishing at those 100, 105 kind of levels, marred down by controversy after another. But the last 6 months, it's had a splendid run. 197 currently, 3.5% higher in trade today as well. So strong show given in by Aurobindo Pharma over the last 6 months and in today's trade as well. There's a news bit that we've got today wherein our sources say that the US FDA may approve the Unit 4 of the company very soon, and Unit 6 is also in line for approval from the US FDA. This will add quite a bit to the top line as well for Aurobindo. Pankaj, I don't know how closely you track this one, but Aurobindo Pharma, as also some of the other mid-cap pharma stocks, but more importantly, Aurobindo Pharma. Lots of news flow. The stock has shown a lot of strength as well. You think it's headed for higher levels? And what's the call on the stock per se?
We have a target price of 170 on the stock. I think this stock had been pretty volatile, and largely driven by the news flows or the counter, which we had some time back we had recommended buy to our customers, but at these levels we would not really advise them to chase the stock. However, we would prefer more stable kind of players like Glenmark Pharma or for that matter Ipca, wherein we have a target price of 517, or on Glenmark we have a target price of 503. I think these two companies are have been giving good set of numbers, stable set of numbers, and which is where we would expect these stocks to do well going forward, and that is our advice would be going forward.
Ashwini, what do you do here? I mean, on the charts, is there a mid-cap pharma stock that looks good for initiating any kind of trades, because the likes of Astrides, Arcolab, Aurobindo Pharma, etc. have moved up quite a bit? What do you do with any of the stocks in this pocket?
Well, you need to buy stocks that have moved, because in the market it's not necessary that everything needs to move. You can look at a Ranbaxy, it's not moved anywhere from the levels it was 1 year back, and you can look at Wockhardt, which keeps moving higher even when it has got 3 and 4 times on the upside. So instead of looking for that hidden gem which will now move because we have bought it, the idea has to be to get into these stocks on declines. Aurobindo Pharma 175, 180 is a strong support. I think chances are it will head towards levels of about 250. Wockhardt has corrected in the last few days. If we can hold on to 1500, I think there is a buying opportunity here, and this can head towards 2100. But overall, pharma now is not showing the kind of momentum that it was showing probably earlier. Maybe, a Shasun chemical can be bought. Even that is going through a bit of a consolidation. So if you buy it with a stop about 155, 160, next levels here could be 187 and then 215.
Okay. That's the word on some of the mid caps, but one large cap that made a move, and if it moves could have quite a bit of an impact on the index, is Reliance Industries. The Oil Ministry, of course, the Economic Times reported that the Oil Ministry may approve the company's investment plans for the KG-D6 block as well. Pankaj, what's the call here? Reliance has pumped up a bit in the last few sessions, but there is this talk of the Oil Ministry approving the investment plans, which could be a big booster for RIL. How are you at ICICI viewing Reliance Industries?
We don't have a coverage on this particular stock, and on the entire oil and gas space, I think still the entire sector is too much policy driven. So we have never been taking a very directional view on this particular sector for quite some time.
Does it look good on the charts though, Ashwini?
Which is the stock?
Reliance Industries.
Well, it's looking as good or as bad as in all the previous times. It's gone from 750 to 850. Well, at some point it must break out. Maybe that point gets reached this time. But in this upswing, I'm only interested in seeing whether it can cross 860, 870 this time. Chances are it can, because this time it did not go to 720, it turned from 750. So maybe if it has consolidated, and that will be good for the market, you have to wait for 860, 870 to get crossed.
Okay, couple of other pockets. They may have been a bit okay today, but over the last few sessions have had a good run up, and that's the media pack. And Nishchal, that's something that I want to ask you about. What about this pocket? Because it's been a bit of a frenzy with all the digitization news coming in, and various segments which stand to benefit. What do you prefer in the media pocket? Is broadcast or DTH? What do you like?
Obviously, broadcasters are going to be the major beneficiaries, whether it is the distribution happens through the dish or through the digital cable. Whichever way you do it, basically the broadcaster is the major beneficiary. So broadcaster is out and out buy. Now within the space, basically I think initially I would like to play the dish guys basically, and then the digital, because digital the undervaluation is gone from the sector right now. Now everybody has to raise money, so they are in a longer investment phase mode than the dish guys. Now Dish guys, basically we really look at it, some of them like Dish TV is already on a free cash flow kind of a mode. So incremental subscribers which they are getting in, they have the money to pay for, so they do not need to really raise money for getting an incremental subscribers. So it is on a self-sustaining mode kind of a business. So that's good part of it. As far as digital cables are concerned, I think they are still on an investment mode, and they have to be in that mode for the next 2 years. So broadcasters definitely a very clear buy, then the Dish guys, and then the third is the digital. That's the way I will play the sector.
Nischal, what about real estate? We've been seeing some great moves for some of these stocks, but is there anything that you like as an investment idea from here?
I think some of the good bets out there are in the south market, which is very well organized to an extent. Balance sheets are also much cleaner. So we like, one is the largest player in the country, DLF, we like it very clearly. One, because they have been clearing out their debt basically, so their balance sheet is becoming much more healthier. Assets which are not core, they are being continuously selling. So they had promised 1.5 years back that they are going to bring down the balance sheet size as well as clear out the non-core assets, and I think they have been continuously doing that. But the re-rating of the stock has still not happened as much as what the company has done. So that's why we believe that DLF is a good bet out here. In the southern markets, I think Shobha, Brigade, I think these are two good companies which are still looking pretty interesting at these levels.